Welcome back. You're watching Power Breakfast on CNBC TV 18. Well, plenty of action lined up for today. So let's go across to Mangalam. He's joining in to fill us in on all the cues coming in from the derivatives market. Hey, Mangalam, morning.
Morning, Nigel. You know, over the last couple of trading sessions, we've seen a near 100-point decline on the Nifty for 2 days in a row. And 2 days in a row, it seemed as if the fall was FII-led. Because if you take a look at the flows, how they panned out on Jan 2nd as well as yesterday, they've pretty much mirrored each other. A sale of 600 crores on Jan 2nd in terms of the cash market, a near 1,000 crores sale yesterday coming in at the cash markets as well. Not just that, index futures also 800 crores on Jan 2nd, 400 crores yesterday, and in stock futures too, near 971 crore and 913 crores in terms of selling in stock futures by the FIIs. Not just that, the domestic institutional investors couldn't buy enough of the FIIs selling. In the previous trading session, rather 2 sessions ago, we saw a sale of 226 crores in the cash market, as well as yesterday, the purchase was limited just to around 35 odd crores. In index futures, the FIIs just over the last 2 trading sessions have added nearly 31,000 short contracts, and this compares with just about 15,000 long contracts that they've added. And in doing so, what has happened is that the FIIs who started the series on tenterhooks have now turned more net sellers than net longs. So FII long exposure now stands at 49%. However, a few silver linings. The first one, at the lower levels, there is a fair amount of downside protection. Yesterday, too, the FIIs added close to 19,000 long contracts in index puts, and this compares to just about 3,700 long call contracts. Over the last few sessions, in fact, in Jan series so far, the FIIs have added almost 90,000 long put contracts, and this compares with 32,000 long call contracts. The Nifty put call ratio has now fallen from levels of 1.54 thereabouts earlier to about 1.34. So this is something that we will keep an eye out on. And while the Nifty fell yesterday, the Nifty futures managed to hold above the 10,700 mark, which is reflected in the Nifty futures premium. A lot of call writing at 11,000, 10,800 and 10,900. Let's see where we go. In terms of individual stocks, watch out for Jet Airways, declined over the last couple of trading sessions and now has entered the F&O band.
All right, Mangalam, thanks a lot for that. Well, from future space, let's move on to the commodity space. And Manisha Gupta, she joins us with all the update from the commodity space.
Well, yet another what a start for 2019. And as we approach the last day of the week, we have seen the volatility just about increase in many of those commodities. The crude oil prices, after a bit of a gains in the overnight market, have seen a decline yet again come in Asia. It is a contradiction of fundamentals. On one side, it is the economic slowdown in growth that the markets are working with, whether it's the U.S., the China, which is the biggest importer of crude oil in the world. We are looking at slowdown there, and that is what is putting the crude oil prices on the lower side. But on the other side, there is now involuntary cuts that we have seen come in from Libya, from Iran. The markets also will now watch for the OPEC and the allies output cut of 1.2 million barrels per day. That really seems to be capping too much of decline in the crude oil prices. So it is jittery, it is very, very volatile as we see. But it still is about macro more than about demand and supply that most of the commodity prices really seem to be following. So it is about the sell-off in equity markets. It is about the US dollar trading at around 9-month lows versus the Japanese yen. And we have seen quite a bit of a sell-off come in for the Australian dollar. That one is at a 2-year lows as well. So it is a currency play in action as well. What is important to watch today would be the US non-farm payroll data and the joint discussion between the current Fed chair and the past Fed chairs like Jerome Powell and Ben Bernanke. The state of economy, the interest rate hike pace going forward, that is something that the world would be watching out for in sense of direction. In the meanwhile, we have seen a decline in crude oil prices. The base metal prices continue to decline. Copper is trading at an 18-month lows right now. So the only couple of things that are trading in green are the safe havens. For example, gold prices, the Japanese yen, the Swiss franc, the usuals are trading in the green in Asia yet again.
All right. Thanks so much for that, Manisha. Well, let's hop across to Anisha. She's waiting by to tell us all the stocks that are in focus today. Hey, Anisha. Good morning.
Good morning, Nigel. Well, I'll start with JK Tyres. That will be in focus because the company's management has said that they're looking at a targeted sales of around $2 billion as well as a capex of around 1,250 crores. So keep an eye out on that one during the day today. Moving on to some brokerage action, Credit Suisse has written a note on the pharma space. They are expecting a strong Q3 from the likes of Aurobindo Pharma, Torrent Pharma and Cadila. In fact, for Aurobindo Pharma, they say that this might be one of the best quarters as far as the US sales is concerned. On the flip side, however, weak results are expected from the likes of Cipla, Dr. Reddy's and Sun Pharma. Moving on and shifting focus to the oil and gas space, CLSA has written a note. They actually poise a bit of weak and muted outlook for GAIL in Q3 because they say that the profitability will be under pressure, as well as the fact that the LNG spot prices were weak will limit the gains for GAIL in Q3. On the flip side, they believe that the volume growth for IGL, MGL, the likes of the city gas distribution has been strong, and even the realizations for them have improved, hence a positive outlook on that one. Moving on to Marico, wherein Phillip Capital has written a note after the company came out with a Q3 update yesterday. They maintain a high conviction buy. In fact, they have raised the target price now to 425. They believe that the international business is poised for double-digit constant currency revenue growth going forward as well. So a positive outlook on Marico. Moving on to Federal Reserve, and actually this is a note written by UBS. They maintain a buy and they have increased the target price now to 120 versus 95 earlier. They expect that the operating growth will remain strong, and that is what will drive the re-rating. In fact, they have upped the target, EPS estimates for Federal Bank for the coming 2 years as well. Lastly, just a quick look at Coal India, because CIMB maintains a reduced call. They have actually cut down the target price to 212 now versus 245 because they believe the headwinds would continue for the stock. Back to you guys.
Thanks a lot for that, Anisha. Well, for today, that's all we have on Power Breakfast. Stay tuned to CNBC TV 18. Bazaar Morning Call comes up next.